All right, the markets started the week on a positive note, though it was a really small range, so it was hard to see how much of the bullishness was able to actually help us get going based off of the kind of the expectations that we've had and how the markets have behaved in the last few weeks. So we're on that precipice of really changing things to the upside, but again, when you get to that precipice and you get there with smaller and smaller ranges and smaller levels of volume, then it makes you wonder if we're going to have enough juice and sentiment to get over the hump. And that's the issue right now. So we're going to talk about how much we got over that hump today and whether or not it was enough and how much more we need to see. We're also going to talk about, again, what's driving big moves in the bond market. So we're going to take a look at that and what that means. Big moves in Bitcoin as well. We'll talk about what that means too. Then also there's some interesting sector moves. Not the typical bullish move that we've seen here lately. It kind of goes back to what drove the bullish markets previously off those mid-October lows. So we'll talk about that. We'll take a look at our trade idea of the day, a stock that's also trying to get going to the upside that may have gotten over the hump itself. So we'll talk about how to trade that in light of what we're seeing in the markets. So let's go ahead and get started. Today is Monday, March the 27th, 2023. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, before we get going too far, I invite you to subscribe to our YouTube channel. Mouse over this icon here, hit the red subscribe button down below. Click the thumbs up icon to like our video. Comment on anything that stood out to you today. Join our website at MarketScholars.com for free. Follow me on Twitter for more content between the videos from day to day. And join our Market Outlook Facebook group that we've created. All right, if you're watching us on our blog, check out some of these other things in our writing, including the Market Outlook Live that I talked about earlier. You can see that here. Come down to the bottom, click that heart. Looks like we got to 100. In fact, we got to 100 right as I was recording the video. So Irene, thank you. I think Irene was our latest one to click on the like button. So again, great. That keeps the streak alive. We've been getting positive 100 likes for quite a few videos here now. So I really appreciate that. You can also click on this icon. It takes you to this tab. Hit that like button there as well. Again, the more you like these videos on these different platforms, it helps us out by getting our content out. The more likes and retweets and comments, the way they work, they end up pushing our content out to more of our followers as well as other people based on the engagement. So that's why we always ask for us to thank you for those of you who do that day after day. For those who don't, you can do that right now while you're watching with one or two really easy clicks. All right, let's start off taking a look at the S&P 500 with the market forecast indicator. So you notice we did end up closing up today about 6.5 points higher, down from the open, just a little bit though. Very small range, even smaller than what we had on Friday. We had a 63-point range on Friday, which was a little bit below the average. Today it was 33 points, so it was about half the average. And whatever gap we did have here closing at 39.70, we did hit the low at 39.70, so it pretty much filled in the exact gap exactly from an SPX standpoint. We actually traded above the 30-day moving average today, barely. At that time, just like it was over here and here, we had a bear tag, bear tag develop where you get the light green shading and the yellow line coming from closing above a falling moving average. Since we closed below it, it ended up turning back red. That can be a really bullish signal, right? It's kind of like three green arrows, the beginning of an intermediate trend, a confirmation we come off the lows, or of course, as we've seen in the past, it's very rare because you have to be in a downward trend, kind of a correction for it to happen. It can be a sell signal, and we've seen that happen before over here. But every other bear tag, you notice, started the intermediate runs to the upside. So we did not finish with that bear tag, excuse me. We came pretty darn close. We pretty much have the idea. I mean, we're at a falling. I mean, we might even have it, tomorrow. We're at a falling moving average. The intermediate line's rising, but it's not in bullish territory. It's not in the upper half of the chart. That's when it turns dark green shading, is when the intermediate line crosses above 50. Right now, every single one of the four lines are in between 40 and 60. This is the neutral zone. That's why it's not colored. It's, you're bullish when you're above 60, you're bearish when you're below 40. And right now, we're neither. All of them are moving in. Now, 3 of the 4 are all rising, and market sentiment's falling. Intermediate line still below market sentiment, though the near-term line is crossed back above the intermediate line. So kind of we're set up for what may be a beginning of a near-term rally. And this, if this is the near-term low point, it would be a much higher near-term low. Again, avoiding getting into the reversal zone like the momentum line did. And if we were to bounce up here, we could really bounce up to higher highs. In fact, I would venture to guess we'd bounce the next near-term high if this ends up following suit. Would get above the last two near-term highs, this one and that one, by the time all is said and done, and approach more than likely this one, considering how big of a move that one was, which wasn't even that big of a move, relatively speaking, to what they can be, and then the much higher low point that we have. So it's, again, we can really be bullish here, or again, if we peak here and the near-term line peaks and rolls back down, then that's about as bearish of a near-term peak as you can get. Obviously, it'd be slightly lower than the last near-term peak, but the fact that it would be peaking essentially right at the bottom end of the reversal zone, or the bullish territory, would be not, and more than likely, again, depending upon if we did drop tomorrow, how much we dropped, the near-term line actually might continue to go up even on the down day. But again, probably not above 80 because we're not that bullish. These last couple days weren't that bullish there. So that's fascinating. It's not very common to get all four lines in neutral zone. It kind of goes to show just how sideways we are. I mean, since February expiration, we're flat as a pancake, right? We came out of February expiration pretty bearish, but since that first day, we're about as flat as a pancake, and that's going on. Pretty much a month and a half now into the end of March from mid-February there. So relatively bearish. Looking at the long-term chart here, the weekly chart, we talked about this transition candle. That is more of a transition candle if the actual candle is really bullish, and it's not really bullish. So that's the problem there. Not as bullish as we'd like it to be, but it is a transition. And the confirmation of the reversal is the close above the body. And as of right now, we are closing above that body. To refute it, we'd have to close back below this body to continue the bearish move. And so, so we're obviously closing above the body, not below this one. And we're not anywhere close to that. Now, it is a higher close, so we're closing above the body. It's not a higher high, so not nearly as bullish as we would like it to be. Again, the NASDAQ did show a pretty bullish week last week. It did get that reversal last week. And this week, we're continuing with the higher close and the positive PPO, the golden cross there, just not the higher high and still not above those really important Fibonacci levels. The Russell, on the other hand, has been so bearish, as of right now, is not giving us a lower high and is giving us a higher close. So we may be in the process of forming a transition candle here on the Russell 2000 to what can be more of a bullish pattern. Next week, here's the Dow Jones Industrial Average. It is showing, it already did show the transition last week. It is not confirming that because we're not closing yet above that body. That's kind of what you would need to see for otherwise closing back below this body before the transition would be the confirmation that we're just continuing the trend back down to the downside. 3 green arrow chart still shows 3 green arrows. It's crazy how the NASDAQ has just been so green. I mean, that's an intermediate run right there. Such a green chart for so long, whereas again, you don't have any of the other indicators showing 3 green arrows. And the Russell's actually been 3 red arrows until today. You finally got 1 green arrow on the Russell, maybe close to another one on the stochastics here. The other 2 have the green arrows in the MACD and stochastics, but aren't above the moving average. You almost got that 3 green arrows on the S&P. Same signal as the bear tag on the market forecast chart. Looking at the DMI, you see that both lines are between 20 and 25, so very neutral chart. In fact, again, that ADX is about as low. I mean, it is as low as it's been all in the past 52 weeks. You're at what, 12.22. So if I were to change this to where we're at now and go out like to a 5-year chart, just to kind of get an idea of how long it's been since we've been this low on that. You have to go back to 2021 before this all started. When we were kind of sideways here for so long, ending that run, starting what was just a pullback at that time. But that's what happened when the ADX got so low in both the positive and the negative. And we were pretty low for months there. And we had a little bit of a bullish move there to get the ADX above 20, so brief green shading. But there's just no shading right now. It hasn't been for a couple bullish moves, a couple green shadings here and some bullish trends. But as of right now, we're not getting a trend in either direction, according to this chart, and as well as according to the Ichimoku cloud. We have a negative rate of change. We're at the bottom end of the cloud, and you do have some bearish leanings, but no trend because we're not above 50. We're not below -1. Looking at the RSI and the CCI, like the market forecast chart, they're both in neutral levels, but between the 100 marks there and right at 50 on the RSI. So again, remember, we've already confirmed the downward move. So to confirm this bullish move above 0 and above 50, we need to get above 60 to change the direction, right? And we need to get above positive 150 or 200 to change that direction, like we did over here, like we did eventually over here, and we turned green. And so we haven't had that yet, so we're still kind of neutral from that perspective. And again, your S&P here, very, very low bandwidth, relatively speaking, way inside the Keltner channels with the red dots, and you can see we're right smack dab in the middle of the range. So like again, we are setting up for a breakout move. It's just a matter of which way will it move, because we're as sideways as we can be. We have over the past year, you essentially have one big volume node, and it's centered. The point of control is pretty much where we're at right now. We've been that flat, pretty much since May. Since May 9th, we're flat. I mean, we finished May 9th at 398.17. We're at 396.5 right now. I mean, we are flat, and we're sitting right around that point of control, and that's going on from May until now. I mean, you're going on nearly 11 months. You're over 10 and a half months of just the ups and downs, but pretty much flat for that amount of time. When you look at the rate of change, when you look at that on the rate of change chart, you can see, if I were to zoom out here, and come out to like a full year rate of change. Again, we have been so bearish, right? We got down to the -20s on the year-over-year level on a rolling one-year window without breaking the 200-week moving average, and now we're at 12% down on a one-year basis. But you can see, again, looking at March 27th was way up here. If I were to take off a month of this, so let's come down to like let's go to like 220, something like that. You can see how flat we have been over that amount of time. Very, very flat. Have been so bearish, and now we're not so bearish. Now we're just flat as a pancake. So we either going, we've been flat before in that amount of time, only to hit zero and roll back down. And so are we going to hit zero and roll back down again, or are we going to change the direction and move to the upside? Of course, your breadth is finally turned positive. It's not above positive 35, but it's small, but at least it's positive. When you look at the new highs and the new lows, which is another breadth chart that we look at, it's all the way up to -90 after being at below -500 on Friday. So some better indications of breadth than what we've seen in a while. The money flow, you can see, is improved. It's still pretty low. It's still well below 40. But this chart here, getting up to -946, that was a pretty significant change. So we do have some positive indications, that we are kind of turning this ship back around again. You can see the daily Hakinyashi candle has turned back up. The MACD is still above its moving average, which is rising now. You have positive, you have a positive candle here. And the parabolic SAR is down. The hull is bullish, even if the 200-day is not. So again, there are some indications that we are slowly turning this ship around. And I mean, ideally, you don't like to do this really too slowly, because how how big of a move down to the downside we had. But shoot, we'll take anything, any kind of positive indications. You'd also like to break below 20 on the VIX, and that hasn't happened yet. You like to break below this 90% mark as well, and that hasn't happened yet. And when you look at the VVIX to get an indication of how volatile that is, it did break 100. It's still at pretty relatively high levels at 95, but at least you did break 100. So the VIX isn't quite confirming what we like to see. When you look at the intraday moves, again, you can see it's pretty darn flat. The both of the positive and negative indicators are below 50, and you're almost about to get them both below 30, which is really, really rare. You can see the last time we really had that was right there when we were kind of flat for so long that we had the negative down, and then the positive came back down too, and we had both below 30 before you broke out finally, and that really kind of took off. So it's not common to get both lines below that indicator, but you are. I mean, you can get them to where they're both below 50. Over here, by the time you got to the 100 mark, you were below 40 on both of them. So that can happen, and that's happened before multiple times. Even did that over here too. Over here, it looks like you actually did get below 30 on the red line. So it looks like this was the last indication where you had both lines below 30. Well, let's see, the day before you're at 31, so you're pretty close. And then the next day you jumped up to 100, and the red line dropped below 30. But like I said, by the end of the week, unless we get a new high point, which doesn't look likely, but unless we get it, because we're just so sideways, unless we get a new high point by the end of the week, you most likely will have that red line below 30. And you'll probably get this closer to, it won't be at 0, but it will be closer and working in that direction as well. That would be the negative indicator getting below 30. You probably get this down to 0. So you'll get the green line back below 0 to 0. This line closer, if not below 30. Again, you would be set up for a really significant breakout, unless, of course, we were to move lower and start getting closer to here. So by the time that happens, by the end of this week, if we're trading up here, you're going to feel really good about life. If we're trading down here, we're probably not going to feel so good, because then we'll have the bearishness. So really, really important to see how we finish out this week. As I mentioned, today's move, so light on the volume, or on the range at 33 points, 3.36 points on SPY, 74 million shares trading hands. Those are really, really low numbers. 74 is way down here. 3.3 points is way off the charts to the downside. It's less than 1%, and we're trading at 1.7. So today was kind of a nothing move, and we may very well get a few more of these until we get that PCE report at the end of the week that can really shake things up here. All right, now let's take a look at what's driving this price action today. Again, you can see from a 3-month return, Qs are still by far the dominant asset class at 15.5%. Commodities and real estate just down still the most by far. But today was kind of like, again, this Friday was kind of risk off. Today was kind of a little bit trying to switch it back to being a risk on move. Commodities really taken off. Real estate did not. Real estate kind of rallied early, then fell late. Same thing with SPY. But the big loser today was long-term bonds. Yields really made a move up to the upside. If you look at TNX here, you can see it was up almost 15 basis points, up to 3.5%. If I were to take a look at its average values, excuse me, give it a second here. You can see here that we did get back above. We were way below the 8-day when we opened up on Friday, down at 3.3%, just underneath that. Now we're up above 3.5% again. The MACD is turning up from really low levels. Stochastics is turning up. So when you look at the alternative to that, that means TLT is rolling over. So TLT is back below its point of control, back below the 17 and 50-day moving averages, as well as the 8-day and the 200-day. So today alone, across the 200, 8, 17, and 50, all in one day, and the point of control as well, with the MACD dropping below its moving average, stochastics dropping below its moving average. So TLT, the bonds are set up to be bearish here, which means that yields are set up to start rising again. Of course, that's not necessarily always been the best thing. Commodities did rally significantly today. That's a good sign. Remember, commodities don't correct during bull markets, so we want to avoid the correction. We want them to, start rallying to the upside. We are above the 17-day moving average. MACD and stochastics are rising, so those are all good signs. The other thing that's been driving markets for a while has been the dollar. In this case, the dollar is actually down today and still down below all these averages, trying to get below its moving average, trying to get going to the downside. Again, a rising dollar with rising bonds and rising bond yields and rising commodities are all bearish for the markets in 2022. And that's kind of what you saw again here today. Commodities, yields, the only thing that wasn't up was the dollar. Small cap stocks did okay. They rebounded pretty well. Emerging markets, but you can see high yield still down on the absolute basis. It actually did rally on a relative basis, which is a good sign because it had been struggling so much. Let's go to high yield relative to IEI. It did rally, closed higher, though it did finish below its 8-day moving average, so it's still down, but it was up higher. And we also been looking at the Qs relative to IWM, and it reversed today. One of the bigger reversals that we've seen. The RSI back below 70, MACD's turning down now. The intermediate term MACD's turning down. The long term still rising. CCI, the ADX is reversing. So there's all sorts of signs that the Qs are starting to maybe underperform, and that's generally a good thing. But doesn't necessarily mean that we're going to, it's going to be hard for us, for IWM to really outpace Qs by that much. Qs were down today, IWM was up more than 1%, and not have the markets just drop in general. So that's the issue that we have. One of the bigger losers by the end of the day was Bitcoin. Remember, Bitcoin has that correlation to the NASDAQ and is kind of a reflection of risk appetite in general. And it's been kind of trying to get above these Fibonacci levels here that you can see posted on the chart, as well as that 62 multiple long term. If I were to zoom out, you can kind of see where these lines are coming from. So the orange lines are based on the correction that everything else is based off of. The green line is based off of this last kind of intermediate move that we had that lasted quite a while for it, and you can see we're right now sitting at the 23% retracement of the correction move to the downside and the 38% retracement of this current intermediate run, as well as the 62% retracement of this post-COVID rally that we are now hitting as a resistance. So there is multiple areas of resistance here from a Fibonacci standpoint. And again, as I mentioned to you before, it's rolling over as well. And again, a sign of risk appetite on the high end. So it's really kind of interesting to watch this, as well as something like ARK Investments and how it will do here at its resistance, and whether the appetite for risk on that end of the scale is going to be enough to get it going to the upside, which is probably what we're going to need to get this risk appetite going in general across everything, right? And you can see from a sector standpoint, remember on Friday all the safety trades did so well, and it was kind of weird that they would do well on a day where the markets were struggling. Well, today that cyclical area that had been down, energy, financials, materials, industrials, all rallied today too. So we're, and you can see technology, communication services, real estate and utilities were all down because of the rise in yields here. But those three areas are coming down. So when you look at your 12 grid, you can see why those cyclical areas did so well, because they're the furthest away from the moving average to the downside. So they have all these over here. They're all four of them along this row. They're all looking the same, trying to get up to there. Whereas up here, you can see XLK and XLC, especially those two, are the only ones that have been dark green shading in the green line. Now your staples have switched to dark green shadings and green line, and the rest of your safety trades are still kind of looking a little bit better than the cyclical areas, but all still on bearish trends. There's only there's only 3 sectors that have green lines where we're essentially above rising moving averages, and it's XLK, XLC, and XLP, which is not common to have that area lumped in with the other 2. But it kind of goes to show how these 2 have been acting as safety trades in place of utilities and real estate because of their link to interest rates, right? And how sensitive they are to interest rates. So the market, instead of going to these 3 areas for safety, have gone to staples in these 2 areas for safety because of their large market capitalizations. All right, so let's take a look now at our trade idea of the day. And let's take a look at Micron. As you can see, Micron here has also kind of turned bullish. It did get its bear tag a while ago, and it's tried to break through its Fibonacci levels. As you can see, various drawn here, especially this last one here. Let me get rid of some of these others and get rid of this little line. And you can see that that trend that we've been kind of retracing here for multiple times. It appears we're trying to get above that 78 or above the 62% retracement again, trying to get above the 78 and really get going here to the upside. Kind of see what it looks like here on the weekly chart. If I were to remove this drawing and draw the current bearish trend that we've been on and the retracement there, you can see we are now above the 23% line again for the 3rd time, working our way back up. Trying to change the trend, right? The intermediate line is turning higher on the long-term chart. On the daily chart as well, we do have dark green shading the green line. It's a yellow now, but it's been fluctuating up and down. The intermediate line's above its market sentiments, rising towards the upper reversal zone. Short-term sentiment may be pulling back a little bit, setting up a little bit of a bullish intermediate confirmation signal, a bullish posture on the intermediate line with an oversold momentum line, but just barely. So you're setting yourselves up for a pretty good opportunity there. Looking at the 3 green arrow charts, remember we did get the 3 green arrows. That's what the bear tag essentially is. We've been multiple days now, 5 days, with all 3 of those green arrows. So that's a good sign for Micron. When you look at the other moving averages, again, you're above the 30. The 8 and 17 day now are above the 30. And we're above the 50-day moving average as well as the point of control and that Fibonacci level. And so things are looking pretty positive, though, again, on the short-term basis, it looks like we may be peaking on a short-term level, but, you're above 50 and you got above 60 to confirm that move. You're above 0, you got above 150 to confirm that bullish move. So you do have, the beginnings of a bullish trend developing there in the RSI and the CCI. You're really close to the beginnings of one here, getting above the cloud, getting up. You're very close to having a positive rate of change over the last 26 days. MACD the trend quality indicator is close to starting a weak bullish trend. And then of course you can see the Bollinger Bands here. A few days ago we actually did break outside the upper band, and then now we're still close. We were when we did this in the Market Outlook live session, we were still at, I think, the 78th percentile. And you can see the bands are breaking outside of the Keltner channel. So we are starting, we have the beginnings of there's a little bit of an evening star candlestick pattern there, but we have the beginnings of a bullish trend. So because we're bullish, but not as bullish, as aggressive, we decided to buy or sell the mid-30s delta. It was actually at the mid-30s when we did this again during the Market Outlook Live. Then buy 2 strikes away. We bought it for 76 cents. You can kind of see where it's at now. Here, let's go to a single symbol. So we're down a little bit since we got into it. But the reason why I went with the strikes I did was if we do have some short-term pullback, even though the intermediate trend may have started, if we do get a little bit of a near-term decline, I mean, we're getting an intermediate confirmation signal today, but if it turns into a 2-day signal, then I've got some room to work with here to be flexible and still have it go up and have the maximum gain inside of a 1 standard deviation move. So that's why we'd want to do a little bit of a directional move and get a pretty decent reward, almost $900 for the $500 of risk for a small amount of risk. That's a small amount compared to our normal levels, which for our class portfolios, normal risk levels are $1,000. So we cut it in half because it's a directional trade, but we can get a good return for what we may ultimately end up losing. If we ultimately end up losing about half of this, it's a pretty decent reward to risk profile for a relatively decent probability of success. Like I said, given that much room of flexibility that we can work with there as time passes and as the stock fluctuates up and down. Once the maxing gets outside of there, then I start losing some of that flexibility at that point. All right, well, that wraps us up for today. You've heard from me now. Now I want to hear from you. Use that link popping out in the top right corner of your screen. That takes you to our Market Outlook forum. Open up any new thread there with any questions or comments you have. Reply to anybody else's thread, and let's keep this conversation going in between videos. Again, thank you very much for watching. Remember to subscribe to our YouTube channel, hit that thumbs up icon, comment on the video, like us on Twitter and Facebook, follow us there, like our content, join our website at marketscholars.com for free. Have a great rest of your Monday night, everybody, and we'll see you all next time.